Good afternoon, everybody. Sound check. Good afternoon, good evening, good morning, wherever you are. How's everybody doing? It could be more. We do have people logged in from all around the world. I'll pull that map up one of these days. But today we have. Let's be honest. Today I don't think I'm going to finish by 6. I haven't done a full-blown day trading set. I don't know why. I mean, there's been little bits and pieces here and there, and of course we talk about day trading all the time. But I did 2 events over the last 2, 3 months back to back about long-term trading slash investing, and those events are on the site if you want to go see them or anything else. If you are newer to DTS, welcome. I encourage you to check out site at DTS for a couple of reasons. Here is the home page. Let me just get this out of the way real quick and we'll get going right away here. And I encourage you to go fairly quickly over to the free stuff page because it's free, and I am starting to say that it is probably the best site out there anywhere for good material for really trying to get a start on trading. I want to encourage you to, go through and learn all you can from that. For some people, it's maybe all they'll ever do to satisfy their curiosity. For some people, they try to learn this on their own, and I tried that a long time ago, so I applaud you for trying, and you may be successful at it. And for some people, it's a good introduction before they go on to actually take classes or whatever. So whatever you want to do with that, have at it, but it's more than just the basic, this is support, this is resistance, the stuff that gets you in trouble. It's a little more advanced look at stuff, although of course it's not intended to be a replacement for an actual seminar program. But let's get going here for tonight. This is going to be day trading A to Z, and it's literally just what I said. It's going to kind of walk us through from beginning to end. I come to realize a lot of stuff. I come to realize a lot of times that I just kind of take for granted, or I think that people know a lot of stuff, and sometimes I don't even want to go into it because I think, well, everybody knows that. And, that's just one of my negatives that I have to step back and remember as I get questions and talk to people. And a lot of you you're just dipping your toe in, you're just starting to look at some of the stuff, and you're really naive to a lot of the things that go on. And, I have an email account where I've let it get passed around, and I get all the emails from, hey, Jay, and I get all the emails from all the other places. And, it's almost embarrassing to me that I'm, in this industry with some of the other emails that I get and see where, you have to click here to, we're not supposed to disclose this secret trading strategy, but click here and, just all that crap that I hope most of you understand isn't the case. There is no magical secret. There is no big holy grail to trading. It's like anything else you do in life. It's a little bit of learning, understanding, practice, and discipline, and you can be successful at it. So let's talk about the day trading part of it. I look always at the market in 3 time frames, and there's not a slide for this, so let me type it in there. In the big picture is what I call long term, and that is, I'm talking long term. I'm talking big market moves, like the whole period from 2009 until last month was all one never changed bullish. Matter of fact, I still have it as bullish, the long-term time frame. The next time frame down is the midterm time frame. This would incorporate everything from what you typically would call swing to core trading. Covering what's going to happen the next, let's say, several days, going out to several weeks. And this is where, it kind of blends into the long term because it's the pullbacks in this time frame that you want to get more long-term positions, and it's a time frame unto itself. And then, of course, the third time frame is day trading, where you are just simply looking at every day unique, open to close, you're flat at the end of the day. And naturally, you can combine styles. You can become a swing trader who enters positions during the trading day, kind of a day trader who holds something overnight. That's perfectly fine. You can cross over, but the point is that day trading, basically, we're focusing on every day is unique. And we can be in the most bullish market in the world and be bearish all day long or whatever, because it's just based on the intraday charts are making the final decision of what we're doing. So that's what we're going to talk about, is the concept of day trading. Market, U.S. market, I'm talking about, in this case here, I'm talking specifically about U.S. stock market, open regular hours, 9:30 Eastern time to 4 o'clock Eastern time. All times I ever refer to are always U.S. Eastern Time, New York time, stock market time. So I don't want to keep repeating that. It's always that time because that's when the market is open. So it's 9:30 to 4, the hours of the market. Here's something you got probably in your email. Talk about what day trading is, some myths or at least some misconceptions about day trading, different day trading styles, what time and prep is needed, and more advanced look at how money is made with some recent chart examples. Let's go. I need my little red ball. Where is it? The money. That's a good topic. The money. This question always comes up, so bear with me. This always comes up, and I think it's a good thing to understand too, because I can relate back to wondering, how do you categorize your return on investment, if there's such a thing, on day trading? Well, you don't really, but let me give you this example. If you take $200,000 and buy a house, you rent it a year, and after all expenses and holding costs, you make $40,000 profit. You made 20% for the year, or a 20% APR. Are we all agreed on that? Does that make sense? Does that make sense? That is simple. Make sense, everybody? Seriously, right? No, I didn't mess up the math, or because sometimes I mess up a slide and then people are hesitant to say, wait a minute, Paul, that's not right, but they don't want to say anything. Okay, so that's easy. We can all do that. But here's the example I want to give you. What if, let's take the real estate example again. What if, keep going, you partner with a friend and you're going to work on a house to flip, and he's putting up the money. He puts up $199,000 and asks you to put up $1,000, just so you don't run out of town. In 3 months, you flip it for $240,000. You now made $40,000. Well, technically, you made half that. I didn't put that in there. So, and forgive the fact, pretend whatever reason you get all the profit. But you get the point here, is that if you now make $40,000, your money in the deal is only $1,000. So you made a 4,000% return in 3 months, or a 12,000% annual percentage rate. Thank you very much. I'll take some of that. But this isn't a passive investment, right? It's not a passive investment. It's income producing capital. And that's where I want you to get the distinction here. The percent really gets silly, right? Right. The percentage gets silly. My best point, though, is when you start talking percentages, when it's income producing capital, it gets silly. Because what if you put in $100? Are you going to say now you have 120,000% return on your money? No, it's your labor, it's your work, it's your skill that you're really getting paid for, right? So, because that's easy to understand in a house, and that's why I use that example. But when we go to the market, everybody is totally baffled. They're like, what does this mean? How do you do this? So here's the same thing in the market, right? You put $5,000 in a mutual fund, and the end of the year grows to $6,000, right? You made 20% APR. Everybody gets that. Nothing to talk about, right? But we go to day trading, everybody gets all messed up. It's that simple. But what if you are day trading and you're using your money over and over and over again? Let's do the math on a trade just so we understand, because there's no point in going into day trading. Again, I always assume like people know this stuff, and I've come to realize like most people don't know this stuff. So let's talk about exactly how the money is done day trading. Here's a trade from yesterday, last night. This is shorting a stock called M, like Macy's, okay? So I'm not here, this is not about the strategy per se, but I shorted it like right here, okay? Playing with the, shorting it right there. So that was like at 12:51 in the afternoon. The short was on, it was under 618, so entered at 617, a stop over 636, so stop at 637. And then you can see the targets. Hopefully you can read that. It's a little small. I know some of the typing is going to be a little small because it was copied and put in here as a picture. But at the top of your screen, you can click and you can expand these slides to fill your whole monitor if you want to, if you're all aware of that, okay? So you can do that if you want to see things a little bit better. If we were going to, well, when I did this trade, the way that you do this is like this. Come on, here we go. Let's do the math. If I'm going to risk $500, right? What that means is I'm saying that if this trade does not work, I want my loss to be limited to $500 for simplicity. So that means that I have to take a share size amount such that if this trade doesn't work and I hit that 637 stop, because it's a short, so the stop is above the entry, I will lose $500. So can anybody tell me the share size that would be needed? What share size could I take to max out this position such that if I were to lose, I would lose $500? Not counting any possible slippage. There is none on Macy's. There is no slippage. May or may not have commissions these days. How many shares could I take? I just want to make sure at least one person out there is on board with me. Well, let me see. If it's a 20 cent stop, 1,000, that'd be 200, 2,500, right? 2,500 shares times 20-cent stop is $500. You do that in a calculator, do it in your head, whatever it is. So I take 2,500 shares. Okay. So that's set in stone from the minute we do it. And here it is. So boom, boom, take 2,500 shares. Perfect. Now, the targets are not based on the money I want to make. The targets are based on the chart. So the targets just are what they are. So ends up taking, in this case, it took 3 targets over a period of a couple of hours. Boom, 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 boom. Total profit for the total profit for the exits was 708.27. Okay. So how much? So I'm risking $500, but that's not my quote unquote investment. In other words, how much capital did I have to have in order to have those shares short? Well, fairly simple. You take the 2,500 shares times the share amount, 617, 15,425, and as a day trading account, you get 4-to-1 leverage. So there's $3,800 that is being held, in other words, so that you could take that share size. Does that make sense, everybody? So if you wanted to, and again, I don't ever like talking percentages because you start to sound like some kind of snake oil salesman. It's just what it is, and naturally you can lose money. But 708 divided by 38 is 18% for 2 hours. And even if you said, well, that's my whole day, that still comes out to be 6,000% per year. Who cares is the point. I mean, but that's what the math is. Because I just had a lot of people say, geez, that is what the math is. That is what it is. That's what you make. Now, you may also say, well, okay, but you can't day trade with $3,500. Actually, you can. Now, in a typical account, you need $25,000, so you'd have to base your thing on that, base your return on that. And this purpose is not talking, it's kind of, the purpose is to tell you how kind of silly this is to talk this way. I'm going to go on to show you how we do look at things. But you actually can, in a prop account, you could literally put up $3,000, $4,000, $5,000 and have 10-to-1 buying power. At the end of this, I'll give you a slide and you can contact me if that is something that interests you to get proprietary buying money. I have a place that I'm not a part of, I don't own, I'm not part of it at all, but it's a place that I have known for years that is just an excellent answer for a lot of people. You can be trading in 24, 48 hours, and there's no hoops to jump through, and your money is safe. It's all the good stuff. So, well, yeah, I know. I'm just saying, well, I thought about that too, and I did it, Greg, but the question is, what annual percentage did you make that day? That's the question I'm answering. This is all just silly. This is just silly talk, so it really doesn't matter. But I'm just saying, at the end of that day, you could say, I made money at a rate of 6,000% per year. But again, the point is, who cares? This isn't passive. My point is that when you're day trading, you can't look at it like, oh, this is, a percentage return. You're working. You're out there working just like when you're flipping the house or whatever. That's the point I wanted to do. So this is why in trading, we always talk about R units. Sometimes when you talk about R units, people look at me like we're trying to be sneaky or something. Like, oh, it's not that we don't want to talk about money. It's just that the point is, for me to relate to people, we talk about risk units. And what we talk about is, at the end of the trade, how much did you make compared to what you were willing to risk? So in this case here, risking $500 made 708. That's a 1.4 R unit. Now, the reason this is nice to talk about is because we all have different R units. In other words, if you're starting out, you may have worked your way up to $50 or $100 risk. And by the way, there's nothing wrong with that. I mean, if you're just like part-time, instead of going to work at Walmart or something, and you want a part-time job, and you have a couple mornings free a week, what's wrong with risking $100 and making, a couple $300 the week for working a couple mornings? That beats working 30 hours at Walmart or wherever you have to work. I don't know how many you have to work. But my point is, whatever you're risking, the key to trading is, what did you make compared to what you risk? If you're risking $1,000, you made $1,400. If you're just $100, you made $140, right? So R units are what we talk about because the risk that you have is what is negative, right? What is day trading? Nothing really changes except everything is kind of on fast forward. Since there is no overnight hold, a larger position can be more easily established. Let's talk about that for a minute. The formula we just went through, right, where we're saying, okay, how many shares could you get for your maximum risk? That works as a day trader. Why does it not work as a swing trader? If you're holding overnight, what's wrong with that little formula to say, okay, I'm going to risk, let's say as a swing trader, you're going to risk more, you risk $1,000. What's the little flaw with that formula I just showed you there? Right, when you hold overnight, there's the possibility, Joe, right, that the thing could open way far away from where you entered. And there's some stocks, like, IBM always comes to example, because IBM is a $117 stock, and the thing doesn't move a whole lot. I mean, I've seen IBM where you could take an intraday entry of 30 cents, literally. And so if you were to take home, 3,000 shares of IBM, it could gap down $10, right? So when you swing trade, there's another little soft part of the formula you have to add. And I don't have any hard rules in that. What I teach people is to do one of two things. Either say, in addition to that rule, about how many shares could I have, also limit it. I'll just type it here because it's not on the slide. Limit it to your limit total capital to a percentage of your account. And I can't give you the percentage because it depends what that account is to you. You may have 7 accounts, that you trade, or you may have all your money in one spot. So the point is to say, okay, no matter what, I'm not going to put more than 25% of my money into one stock, because if it goes to zero, at least I don't lose more than 25%. Does that make sense, everyone? And also then I ask people to say, what if it's the stock gap down 10%? How bad would you be? Because that can happen. Would you want to hang yourself, or would it just be kind of a bad day? So in addition to the share sizing we talked about, as a swing trader, you want to do that. But as a day trader, we don't really care because we can get out whenever we want to. Let me just mention it because it is possible. What is the only time that a day trader can be at risk like you would be as a swing trader? What's the one time that you can be at risk? Where you have a fixed stop, but all of a sudden, oops, I can't get out of my stop. Right, and something's halted. A halt means that during the trading day, they just stop trading it. Just stop trading it. Now, when we go to get coffee, you can always have a stop loss in place. But if they halt a stock, which does happen, it literally just stops trading, no warning. There's nothing you can do. You can be in a stock, and you could be short 2,000 shares, and all of a sudden, boom, just not trading, no warning, nothing, and then all of a sudden, boom, it reopens $7 above where you are. That's what can happen. Yeah, but Joe, limit up, limit down. When that's happening, and it's your own fault if you're in it if you don't want to be. But a halt is just unannounced. But the truth of it is that a halt is just about the same as being hit by lightning sitting in your office, unless you go aggressively chasing the things that could be subject to halt. In other words, if you like to do the climactic, if you go after that high and low of the day list and try and go long those things that are in a free fall, you're going to open the door to the possibility of being halted. But if you're out trading the normal stuff, a halt is not something I worry about because it's extremely rare. Extremely rare. My entire career, I've been in one halt, and I was in a room that had a halt that I wasn't in, and actually both resolved positively. So other than that, that's what it is. Stocks, since there's no overnight hold, the larger position can be more safely established. That's what that means. Stocks that have a good year may end up 10% higher, but they may actually gain or lose that 10% several times over the year. The end of the year, stock's up 10%. A lot of people say, hey, it's a pretty good stock, right? But that stock, to get 10% for the year, may be up and down more than 10% multiple times. As a matter of fact, every day we are trading stocks that are up or down 10% that day. And I mean even before coronavirus, even before 6 weeks ago. All the time we have stuff on the screen that's moving 10% per day. So you have those moves available to you, and this is where the great opportunity comes in day trading, is that you literally have sometimes a whole year's move that's happening in front of you in a single day. Now, it's not always what you have to do, it's not what you have to go after, but I'm just saying those moves are there. So a couple of examples here just to compare and contrast the two. Again, this is kind of 101 beginning. As an investor, you find a $20 stock, you think it's going higher, you have a $40,000 account. As a day trader, you have a $20 stock, you think it's going higher, you have a $40,000 account. Long term, time frame, you're on the daily chart. Buying power for you need 10K in order to secure that $20,000 worth of stock. You enter at 20, your stop's going to be at 19, you're trying to get to 22. Your share size is 1,000. Did I make a mistake here somewhere? Entry, stop, target. Yeah, there's something wrong in the math here, but that's okay. Oh, and so I'm just saying that, yeah, so at the end of 1 month, it moves up 50 cents. And a 50-cent move on a $20 stock, by the way, is not peanuts. That's 33% per year. So that's a good move, right? That's a real good move. So as a long-term trader, you make your $500 using the 10,000. As a day trader, that same stock, the same exact stock, you're on a 5-minute chart. In order to secure the $20,000 of stock, you need $5,000 because it's 4 to 1. Your entry, stop, target, whatever, but now you have 4,000 shares and you just go for 25 cents, which is, for those of you who have been around more than a few days, can a $20 stock move 25 cents? Is that rare event or every single day that would happen? A $20 stock moving 25 cents. For the people who are brand new, I just don't want to tell them this, right? Yeah, every single day, practically every stock. It's just, yeah, I mean, there are some rare stocks that don't move, but I mean anything that's on the list I'd be trading all over the place. Very, very simple. So very achievable stuff. So of course, and then you have a profit of $1,000 in a day rather than $500 in a month. And again, I'm just explaining very clearly what the advantage / attraction is of day trading. Here it is just in simple English. As an investor, you have a $20 stock, you buy 1,000 shares, blah, blah, blah. At the end of the month, you sell it for a $500 profit, or you have a $500 profit. If you hang on to it as a day trader, $20 stock, 4,000 shares using less money, and at the end of the day, you have a $1,000 profit. It's just fast forwarding everything. That's the attraction, okay? What is day trading? Again, if you haven't done it, for a lot of people, I've come to realize this is such a big mystery, such a big myth. People picture people with IV bottles sticking out of their arm and bottles under their desk so they don't have to leave. And they imagine, young people in a fast-paced environment, speedy, frenzy, just a terribly nerve-wracking type of thing. Well, it doesn't have to be that. There are a lot of different ways to day trade. Me personally, I'm way more on the laid-back side, I think, compared to what you could be. But here's what you could do as a day trader, and this is not an exaggeration. This is not meant to be funny. This is literally true. You could be a day trader. It depends on your style, what you want to do. You could get up at 9 o'clock. You could go get some coffee, take a walk, pull up to the desk around 10 a.m. I guess it'd be a short walk. No, not too bad. Enter a trade, go to lunch, peek at your trade at lunch on your phone, move a stop if you need to, go with some golf balls, come home and see what you have. Does anybody have a problem with that trading style? Anyone have a problem with that trading style? It's the style I like, other than the fact that I do like the early morning. So I need to get up at 8 and do an hour prep, and then I'm with the room at 9. But we like to get done, 10:30, 11. Now, I'm going to show you some things from this last month in a little bit, and I want to warn you, this coronavirus thing has been kind of a pain because it has had some mornings so volatile we've had to wait, and we've had to take a second swing sometimes in the afternoon. So I have had more trades after 11 o'clock than I ever have. So when you see that, keep in mind that's not normally the case. Normally, a couple times a week I may do something after 11:30, but generally speaking, we're kind of done in the morning. And I keep some positions open, and I go hit golf balls, go for a walk, and whatever. That's what I actually do. So you don't have to sit there glued to the chair. As a matter of fact, I have found very, very much the case that it costs you money to sit there glued to the chair because most people are terrible managers of things. Fly an airplane, hit a golf ball, whatever, whatever you have time to do in a couple, 3 hours. Go to the range, there you go. Time frames are critical, and they refer directly to the chart you are using and indirectly to the amount of time that you intend to hold a position. Day trading means that you're using what we call intraday charts for the most part. We can look at a daily chart for some guidance, but basically we're looking at an hourly chart, a 15-minute chart, a 5-minute chart, a 2-minute chart, a 1-minute chart, a tick chart, whatever it is that you want to use, depending upon what you like your style to be. However, it does not address the reason you're entering or exiting a position. Okay, a strategy is not scalping. That's the time frame you're on. The strategy has to do with why are you going long that stock right now? Why are you going short that stock right now? That question revolves around whether you're fundamental, technical, or believe that the cosmos affect your position. The reason you enter or exit a position should be based on technical analysis, period. Fundamentals have no place in the decision-making process, and that applies to all time frames equally. It's also true of news or reactions to news or all that stuff. None of that has a place in trading. Styles and prep. There are many styles in day trading. One of the most common questions that I see that I get asked is, what's the best strategy? What's the best style? There is no best. There is no magic formula. There is no magic indicator. There is no magic time frame. There is no magic moving average. There is no magic indicator. Nothing. It's just simply the ability to read a chart. It's just like any other profession that you would enter. You study the subject matter at hand. You get a good grasp for everything in that category. You then find what you like and you specialize in it and you become an expert at it. It's the same procedure when you become a doctor, right? You go to medical school, and when you're in your first year of medical school, you don't learn about toes and arches because you only want to be a podiatrist. Do I have the right word? Is a podiatrist feet? I don't want to be embarrassed here. Is podiatrist feet or kids? Podiatrist? Podiatrist. Okay, podiatrist is feet. So if you want to be a podiatrist, right? All these people are doctors probably. You don't go to school and your first semester take toenails, arches, whatever. You don't spend 6 years learning feet, right? You go through a general education of all that there is about medicine, and then you specialize in whatever it is that you want to specialize in, right? It's the same thing when you learn trading. It's not a 6-year adventure, but you learn kind of everything. You learn what there is out there, different time frames, different styles. You learn everything from breakouts to pullbacks to 1-minute charts to 60-minute charts to daily charts to weekly charts. And the reason you do all that is so that you have a good understanding of everything out there and so that you can pick your favorite style concept, right? I did an article probably a year ago now, and the title of the article was "The Grass is Always Greener." Anybody remember that? Anybody remember that article? It was sent to all DTS members, not just some other people. Nobody remembers this stuff. I don't know. The grass is always green. The point of the article is that if you do remember, thank you, that if you don't learn everything, what I see a lot of people do is that they start to learn something and they're getting okay at it, and then all of a sudden they see this other guy. This other guy, he's trading breakouts on a 16-minute chart. I want to try that. They just start jumping around because they think there's something better to do. They think there's some better strategy. Or they think that there's some better time frame, and it's not. And if you don't learn everything, then you don't have the chance to really focus on what it is that you come to love. So you kind of learn everything, and then you come back and you specialize in what you love. And that's why when some people say to me, Paul, I'm a little leery about learning this because I'll never learn as much as you do. And I tell them, you don't have to learn as much as I do. You need to have a general knowledge of what I know, and then you need to really learn well that little thing that you want to do in the market, right? Jack Schwager book, Market Wizards, New Market Wizards, set out to interview 25 traders and discover what it is they all have in common. The technical thing, he figured, I don't want to learn how to trade. I'm a behavioral therapist, whatever. So I'm going to learn what these guys all do the same, and I'll just duplicate it. But of course, what was ironic was when he interviewed these 25 traders, he found out that technically speaking, they did nothing the same. They all had their own little unique thing. They were all different. There was nothing that he could say, here's how I synthesize this. It was all different stuff. The only thing they had in common was that they all waited for their little special thing that they like to do, and they waited patiently for it. Does that strike home with anybody? Thanks, Joe. There will be a recording of this, Joe, but it won't be available till the weekend sometime. Right. And again, I read this book a long time ago, and this is what I walked away from the book. And there's a second thing they had in common too, but it's not really that pertinent to what we're talking about right now. To get into day trading, everybody here probably has some interest in charts in the market, or you've had some interest and you've been dipping your toe and looking around, or maybe some of you have been learning on and off for a long time. I don't know, but the first thing you have to do, and there is no debate about this. There is no, trust me, 20 years teaching people, I would do whatever it is to make money. If there was anything out there, better, easier, faster, I would do it myself and I teach it to people. Why wouldn't I? It would be stupid. But there is no other first step other than you have to learn how to read a chart. And I don't mean pull up, a book or a 30-minute video on technical analysis and think that you understand it. I want you to remember something, that they say 90% of the people that come to the market lose. And I don't deny that's true, and it probably is true. I don't know what fail. I don't know what fail means. I mean, if you quit your job and you go to day trade and you need to make $70,000 a year, and you only make $30,000 a year and you have to quit, are you a failure? I mean, I don't know. I don't know where that number falls. You know what I mean? So I don't know, but the point is that without question, the vast majority of people fail at this. The vast majority fail because they just come in and they just wing it. They just think, I'm really smart at what I do, and I'm sure if you're here listening to me, I will grant you right now that you're probably a top 5% person in the world, because you have the time and the money to be sitting here listening to me. You're interested in the market, all those things together. But the point is, none of that helps you. You can be the smartest person in the world, the best salesman, the best doctor, the best lawyer, the best whatever, and that stuff doesn't translate to trading. You have to learn charts. You just do. That's all there is to it. I mean, a 16-year-old kid is as qualified to learn this as you are, and I don't care if you're the CEO of a 500 company. It's just the way it is. So you have to learn how to read a chart. You have to learn it in a superior way. You have to really learn it. And I want you to remember that if 90% of the people fail at this, you have to be outside the box, right? You have to think a little different, right? People sometimes come to the room and they'll see me take a trade, like, what the hell are you doing? So what is that? I didn't take it because I didn't get it at all. That was stupid. Well, if you think it's stupid and you lose money all the time, guess what? That's a compliment to me. Let me say that again. If you lose money all the time and you think what I just did is stupid, I can't think of a better compliment, right? Because it means I'm doing something you're not doing or wouldn't even think of doing. So you have to learn it really well. And then what you do is once you learn things, then you go out there and you just paper trade everything. I teach people to just go out there for 2 weeks and paper trade everything under the sun. Nobody else would tell you that but me. Everything under the sun. And why are you doing that? You're doing that so that you get a real sense for what you like. And I think there's no doubt that when you just go get used to this and trade a little bit, you're going to come up with your personal likes and dislikes, right? In other words, let me ask you guys this right now, just off the top of your head. Just generally, I'm not talking about strategy. I'm not talking about what you necessarily do. I'm not talking about looking at your statistics if you do trade a lot. I'm just saying, just off the top of your head, are you more comfortable taking, in general, breakout plays or pullbacks? Either put BO or PB, or if you don't care, put don't care. What in your gut? What do you feel better about? PBs or BOs, or do you really don't care? You're going to find that 90% of the people care. Very few people will type don't care. I care. I mean, it's not that I care. It's not that I can't do the other one, but my comfort level is more with one than the other. Because there are some people that just can't fathom the fact that there's something to the left that somebody could be selling into something, whatever. And there's some people that don't want to pay the higher price. It's just what you're comfortable with. And guess what? You need to study and learn as well as you can exactly what a breakout is, exactly what a pullback is. Go try and trade them, and then decide, you know what? I'm just not comfortable with that pullback thing, or whatever it is. And then that's what you focus on. For you intraday people, what do you like strategically? A 1 minute chart or a 15-minute chart? Go ahead. 1 or 15. What do you like if you've been trading intraday at all? 1 or 15. What do you like? 1, 15. See? More 15s. None. 1. See? All over. That's perfectly fine. What do you have to know strategically? If you're going to trade a 1 minute start instead of a 15, what do you have to know strategically different? From a strategy point of view, from an understanding charts point of view, if you're going to trade a 1 minute chart instead of a 15, what do you have to know different? What do you have to, what specialty do you have to know about a 1 minute chart instead of a 15 to make money? What strategies do you have to know? What needs to be different? No. I'm going to give you the answer. Right, very good answer. Absolutely nothing. Absolutely, positively nothing. Daily chart, 1 minute chart, 15, it's all the same strategically. It absolutely doesn't matter. I teach class sometimes, I have a chart up there, you don't even know what it is. Doesn't matter. Could be a 1 minute chart covering this morning. Could be a weekly chart covering the last 2 years. Doesn't matter at all. So that's the great thing about technical analysis is that you learn it and then you can go and pick the types of concepts that you like and the charts that you like. What do I like? Real simple. I do prefer pullbacks. I will do breakout type stuff, but not as a strategy. See, when I talk in me, the world according to the language of charts, according to me, I make a big separation between strategies and entries. So I'll take an entry on a breakout concept, but the strategy for me is never a breakout. I don't do a strategy as a breakout. There's nothing wrong with them. Perfectly fine. It's just not me. It's not what I do. So I prefer the pullback strategically, and I like my strategies to form on a 15 or a 60-minute chart, but I may get an entry off of a 1 minute chart. The entry, not the strategy, okay? No, the 1 minute chart is not choppier. That's not true. Any chart could be choppier on any time frame, but there are just as many beautiful 1 minute charts out there as there are beautiful 15-minute charts. They can be, I don't think that's a strategic difference, What's the next line here? So you will answer your own questions. What do you like? Breakouts, pullbacks? Do you like to hold all day or a few minutes? Again, some people are very comfortable as a day trade, sitting back a couple hours, let it run, walk away for 2 hours. Some people can't do that. I was talking to a guy the other day. He's like, I can't leave my chair. I don't care what you say. And I'm like, well, if you have a stop in place, what do you care? Why are you sitting there? Well, it may do something. Well, it may do what? What's it going to do? Is it going to leave the country? What's your stock going to do? All it's going to do, it's going to go up uninhibited if you're not there to take profits real quick. Remember, think of something, guys. I like this quote a little bit. Think about this. If your trade hits its target eventually, right? Whatever target you had in mind, if you hit it eventually, any management that you did to that trade, what about it? Any and all management you did to a trade, what can you say about it? The wonderful world of management. Management, where you have to be sitting there and making sure we get the most money we can of every trade. Right, any management you did would lose money. Not just uses, it costs you money. Every single thing you did costs you money. Now, I'm not saying not to ever manage. Obviously, there are times you don't hit your target and you're able to preserve some nice profit. That's good. But on the grand scale of things, if you look at where people are on that scale, people are way, 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 way too much to the side of over managing and not letting things get to nice targets, right? Would you agree with that even about yourself, everybody? If you know it's a problem, there's only one person that can help fix it, right? You have to, that last line there, you have to pick a style that matches the way, what you like, and perfect your technical analysis for 1 to 3 setups that you love. Yeah, that's what you do. It's kind of that simple. I don't want to oversimplify, but I mean that's what we have to do. The point is that most people don't do this. They just don't. Prep time for day trading. Well, it depends. Your prep time for day trading could be 0. It depends again on what you want to do. If you want to trade gaps, stocks that have gapped in the morning, and you want to take them at lunch, which is a good strategy, you don't need prep time at all. You literally would get up at 10:30, pull up to the computer in your pajamas, look at the gap list, put out the ones that meet your criteria, and wait an hour for them to give you your entries over lunch. zero prep time, right? If you want to trade breakouts at the open from the prior day, you have to spend a half hour prepping before the market opens, right? But you also may be done with your trading day by 10 or 10:30. And if you want to really be prepared for 2 or 3 different type strategies, you may spend 30 to 60 minutes preparing for the day. But it's not necessarily tons of time at all. It depends what you want to do. Who should day trade? That's a good question. Well, anyone who has 1 or 2 mornings free a week, or anyone who can make their own schedule every day, or anyone who works at home and can make a couple hours free time during the day, or anyone who travels a week and then is home a week, or anyone who's simply home and available. It's been this magical formula in any trading room I've run for years. 75%, I don't know why it is, but out of the total members subscribed at any given day, 75% log in. Why is that? Well, it's because there are some people that are full-time traders, and that's what they do, but there are some people who are doing this part-time, and they may be a consultant, and they're gone for a week, and then they're home for a week. They may be somebody who makes their own schedule, and they try to make all their appointments after 11, but some days they can't. So, just people that are not necessarily, you don't have to be there all the time. And I actually think the perfect thing to do, and I encourage this, not to, to like get you sucked into day trading, but I encourage you to take a day or two a week if you have it and come in and try day trading, because that's how you learn when you don't have the pressure. When you can say, hey, I've got a job, making my money, things are good. What about this day trading thing? Come in a couple mornings a week where you can be relaxed and chilled and say, hey, if I make a little money, great. If not, I'm still learning, that's fine. That's the way to do it. What I don't ever want anybody to do, I don't ever want anybody to like quit their job and say, well, okay, now I'm day trading and boy, I better make money this week because I got to pay the mortgage next week. You won't make it that way. And I don't care if you're following somebody or if you're not following somebody, you simply won't do it. I've seen it all the time. No one should quit their job with the expectation of paying their bills next week from the money you make trading. You start off small, no matter how much money you have. And no matter if you're learning on your own, if you have a mentor, or if you're in a good trading room, it doesn't matter. You start off small. I've seen people all the time even follow me on a profitable day and lose money because they're just clueless. No offense, but they get all wrapped up in the emotions. And we talked about that in the room a little bit today, that sometimes people come in and they come in because they're struggling and they can't make money, so they want to follow somebody in the room. They'll take one of my trades and they decide that they can manage it better than me, so they manage the trade that I took and they end up doing terrible. So, you want to step in and learn this if you can, when you can. And I encourage you to do it this way, because this is the no risk way, is to get in there, and if you have a little time, hop in, do a few trades, start to learn, and maybe you find you do it more and more. And in all seriousness, well, let me not even go there, but you seriously can look at the concept. If you're working and you're just looking at trading as something new, and you need some more money and you want to work a part-time job, consider this. Consider taking a couple mornings and trading. Now, one issue is we're going to talk about is in a day trading account is that you have to have $25,000 to day trade, but you can do it through a prop account, it's called, where you would only have to have $5,000 to be able to use $50,000 of buying power. I'll show you a slide on that later, but it opens the door to a lot more people who are able to say, hey, that could bring some extra income for me doing that. Now, I want to show you why you start off small and work your way up. Nobody seems to get this, and there's a video on the website that's still one of my favorites. It actually has migrated back to the archive page, but it's called From Chart Reader to Day Trader / Investor, or Trader, and something like that. And it's still one of my favorites. And what's important is that you start off and get confidence. Again, whether you're learning for yourself, whether you're learning in a seminar program with or without me, whether you're in a room, my room or not room, wherever it is, you start off small because you have to learn what you're doing. And then when you are successful, you just keep raising the R unit. How far? There's no limit until you can't handle the share size anymore. But this is, and I want, there's some, this slide, this is an old slide. I used this in a presentation 2 years ago, okay? And I was going to change it, and I figured, no, I'm not going to change it. What needs to be changed on that slide, everybody? Something that changed this last year. What this is saying is, if you start off, and again, you should not be starting off at a $200 risk. You should not be doing that. I'm just saying somewhere down the line, as you start, up in the risk, I just want to show you how it adds up. But right, I have a huge commission amount in here, right? $35 per round trip, right? Yeah, and now that could be anywhere from $5 to zero, depending on where you are on brokers and commissions and stuff. So, but in here, I just want you to go through the numbers. If you did, what did that figure? Four trades a day, 5 trades a day, right? 4 or 5 day trades a day, and that's high. That's kind of that's where I was this last month, but it was coronavirus that increased the trading. And look at my numbers here, folks. 50% batting average. That's all I'm saying you do. Is that phenomenal? Every other trade rate? Well, every other trade rate, but the winners are 1.5 times bigger than the losers. Is this a ridiculous pair of numbers to achieve? No. I'm just saying, for every trade that you lose 100, you make 150, and every other trade you're successful. That's all it is. This isn't like, I'm not showing you some numbers like you have to be the trading god from Olympus to hit them. These are just like, kind of not hard numbers. And I just want to show you how the math adds up. So profit from winning trades $1,500, loss from losing. So you make $5,000 gross, and then take away your expenses. But like I said, the 3,500 of these expenses aren't even expenses. And I even put in here trading room fee and software fee and stuff that doesn't even exist sometimes. And so your profit here is going to be somewhere between, let's say, $3,500 and $4,500 on $200 risk, right? Now again, you never start that high. You never. The slide is not about how you start. You start at $10, and you earn the right to get up to 2. But then I just want to show you, once you're at 200, you say, what do I do now? What a lot of people do is they think you take, I'll take twice as many trades to double my profit. Does that make sense to anybody? Is that what you do? If I want to start making more money per day, should I double the trades I take? That would double my profit, I guess, right? Should I double my trades? Yeah, absolutely, positively not. At least not the way I trade, and mathematically it doesn't make sense, because it's it's like that movie 21, right? You sit there and you play hard when the card counting's in your favor. You hit the market when you have the edge, when you know what the market's doing, you have watches in front of you, and you can't just double your trades. You can't just all of a sudden, it's not like there are all these trades just laying around waiting to be done and you're just bored and you pick one up. These are things that we look for, and we take the best of the best and we try and find the best setups, and you can't just all of a sudden triple the number of trades you take, because you're going to decrease your success dramatically. So yeah, why not just risk more money? If you do nothing different except risk $300 and you don't change a thing, and let me tell you, that's not necessarily easy to do. I'm not going to tell you, and mathematically, it's absolutely guaranteed you can do it. Physically, it's guaranteed you can do it, but psychologically, some people freak out when they start risking more money. Why? Well, if every other trade's a loser, what if you start off with 3 losers, right? People freak out, oh my God, and then they start selling their winners early, and then they can't make money. But if you don't change what you're doing and you have the confidence, you're up to 300 and boom. And again, there's this huge commission number in here. Boom, boom, boom. So add 3,000 to all these numbers if you want to. $400 risk, $500 risk, $600 risk. You don't have to stop increasing the risk until you have difficulty getting the shares you need. Because the more you risk, the more shares you need. But it depends on your trading style. See, if you're taking like 15-minute chart setups and you prefer to go with a little wider stop, you're not going to have trouble, getting up to $1,000, $1,500 risk. But if you're more of a scalper and you're trying to do things with 5-10 cent stops, and you've expanded your universe to a whole lot of stocks that maybe aren't as tradable as they should be, you're going to have a hard time getting share size. Now, if let's talk about that concept a minute. Scalping is a term that I'm not sure it's defined well. I dislike the term sometimes because of the way people use it. There are a couple of videos on the site. One of them is called Two Time Frames to Be Aware of. And they discuss what I consider to be the evils of swing trading if you're doing it, like if you work a job and you're trying to swing trade the daily chart. I'll bet you anything you're losing money because that's ridiculously hard to do. If you want to hold stuff a couple days, you need to get intraday entries, period. If you're there intraday, you should be getting intraday entries for stuff you want to hold 2 or 3 days. And then after that, you should be long-term, holding stuff for weeks, but not in that awkward time frame. But the other video is about scalping. Scalping is a perfectly fine time frame. And what that means is that you're on that very small time frame and you're taking big share size to get the same profit from smaller moves. But here's how I hate the term being used. Somebody's trading 300 shares of some stock. They're trying to go for a dollar target, right? You follow me? Get 300 bucks profit. And the stock runs up 12 cents. And they get all jittery and they say, well, I'll just scalp this out. Can't lose money taking a profit. That is a loser talking. You can't do that. I'm not saying you can't scalp. I'm all in favor of scalping. It's a very good time frame to do. You can do it. But here's how you scalp. You go into a handful of stocks like BAC, Citibank, Ford, where you can buy 10,000 shares without even, you can buy 10,000 shares of Ford and not even be noticed, not even be seen, not even dent the level 2 screen. And that's what you have to be able to do is you take 10, 15,000 shares and you go for a nickel, you go for 3 cents. That's what scalping is. It means you carry out your full chart trading plan on a 1-minute chart, but you have the share size that makes a profit for you. You don't scalp with 300 shares. You're not going to make anything. Does that make sense, everyone? So scalping good as a strategy, scalping bad as an excuse for somebody who doesn't know how to manage a trade. Lesson, so paper trade, risk a micro amount after you paper trade. I'm talking 5 or 10 bucks. Get confidence, build up your skills, understand what you're doing. Move up when you prove you can do it. All I ask people to do is this. Don't start off risking 100 bucks. Why not start off risking 100 bucks? I know especially you men out there, us men, right? I'm not going to be some little pansy risking 10 bucks. If it's not 100 bucks, it's not worth doing. What's the problem with risking 100 bucks when you start off? Men only. Women, you don't have this problem. That's why you're better traders sometimes. Men only. What's the problem? What's the problem risking 100 bucks? This is not a, DTS is not a politically correct company. Too bad. Right. If you're not making money, you're down 500, you're down 1,000, you're down $2,000. Guys, what do you do when you're down $2,000 and you haven't had a trade right in 3 weeks? What do you do? What's the answer before your wife finds out? What do you do? There's only one answer. That's right. You risk 300 bucks, risk 400 bucks until you get it back, right? And then all of a sudden you're down 20% of your account. And now you got a problem, right? This is what happens. Trust me. So what you do is you risk 10 bucks. And these are the words that you cannot argue with me about. Because here's what I say to people. Paper trading, $5 risk. Mark, Bob, Roger, prove to me that you can make money 3 days in a row. That's all. All right? Can you do that? Show me you can make money 3 days in a row. And then you can move up to 5 bucks, to 10, to 20. Does that make sense, everybody? I'm not asking you to risk 5 bucks for 3 years. Just show me you can make money for 3 days. That's all. Because here's the big thing. What if you can't make money for 3 days on 10 bucks risk? Then you don't move up. You realize, boy, I'm not very good at this. I'm glad at the end of the month I'm only down $200 rather than $20,000, right? So that's the whole secret, because you get confidence at low levels, and then when you move it up, it's like nothing changes. It's just there's an extra zero or whatever at the end of your share size. Well, you don't move that quickly, of course, but eventually there's an extra zero, all right? If you can't do it right, move down again until you get it straight. Keep moving up until you hit the risk amount where 1 hour a day provides your living, whatever your goal is. Your goal is to get the confidence to move the risk amount up so that 1 hour a day is the goal that you want to have. Now, that could be very different for everybody. Like I said, you could be saying, hey, instead of going to work at Walmart as a part-time job, I'm going to risk $100, and if I can make $300 a week, that's what I was going to do at Walmart, so that makes my day. That could be what you're doing. Could be you're needing to make $800 a day. Whatever it is, that's where you move your risk amount up to eventually, okay? Joe, I have interviewed over 400 women traders, and 100% of them, all 400, have never revenge traded. It's an absolute fact. Not one, not a single one. Yep, I have their names, addresses, phone numbers. You can verify it if you want to. let's. I do think women are better traders to some degree. Yeah. I'm not sure I can actually prove that, but some of the better traders in all are women, for whatever that's worth. So, all right, enough. Results. But first, let me go over one other thing here. I'm not sure I phrased this right because this is like the last slide that I did. When you ensure, this could be worded terribly. Let me see. When you ensure you put a good week together as a day trader. Oh, that's pretty good. What type of days do you have to look out for? Now, this is a weird question. I may have to keep emphasizing this, but when you want to make sure you have a good week, you want to make sure you have or you avoid certain days. What are those days? Because the answer is, in my view, is not going to be what you think it is. That's why I ask questions, so I can go, nah, that's not what I think. Oh, Ellie, you blew it for me. I just said there's not a woman in the world that ever revenge traded, and you said you stopped, which implies that you did it. So you just made a liar out of me. Okay, so James has one of them there. James is saying if you want to have a good week, you need to have big winning days, right? Big winning days. Okay. Well, you know what? Of course we want big winning days. That's true, but I don't think that's the key to success. The reason is because, you know what? Even bad traders have big winning days. They do. As a matter of fact, a lot of bad traders are just real aggressive, and they have some big winning days in there. But yet they lose at the end of the month. So, of course we want big winning days. I'm not saying that's bad. I'm just saying that that usually is not what's going to make or break you. And of course, the other question, the other obvious one is going to be, well, avoid those terrible days, right? Avoid the big losing days. Well, that's also true. You definitely want to avoid the big losing days. But you know what? After a few of them, you start avoiding them. In other words, you get that punch in the stomach and you say, okay, you know what? I have to put in a loss limit. I have to restrict what I'm doing. And most people automatically do that. And you know what? Here's the thing. At the end of the month, if you had a bad month, and you go back and you look down your record, boom, 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 and you have 3 huge losing days, do you notice that? It's an important question. Do you notice that? Is it obvious? It's like you have 3, you're supposed to contain your loss, let's say no more than $600 a day, whatever you're trading. And you have 3 days and they're over $3,000. Do you notice that? I mean, is that something like it just, I didn't know that happened to me. Of course you notice. It's like these big gnawing thing eating at you. You have these big losing days. You know what? You tend to fix it. In other words, whether you fix it or not, you know that's the problem. Does everyone agree to that? Does everyone agree to that? That if you have big losing days, it may be a problem, it may be an issue, but you know you have the problem, correct? Right. See, the problem in trading are these little silent cancers, the ones that we don't really see. And I call them, Myrna is good, the McDonald's days. What are McDonald's days? Well, see, to me, everybody's going to have some nice winning days. Everybody's going to have a losing day here and there. It's going to happen no matter what. But to me, there's a whole lot of days where you're just going to be kind of like just around zero. You're going to be breaking even, up a little, down a little. And the important thing is to just let that day go out as a neutral day. I think where a lot of people lose it. Tell me if you agree or not, because this is my very educated opinion. But a lot of people lose it, not from huge losing days. In the beginning you might, but they lose it because they have a small winning day that they turn into a medium losing day. Right? You guys know what I'm saying? And you have all these days, and at the end of the week, you maybe would have had 3 days that would have added up to being 3 days worth of small profits, and now you have kind of 3 medium losing days. And then you have a nice winning day, but now it only overacts the losing days, right? You know what I'm saying? And the problem with this is it's kind of a silent disease. It's like you don't really notice it. Because you say, okay, you look back at your record, you say, okay, well, There's an average losing day. There's an average losing day. No problem. But the truth of it is, those 3 average losing days were all winning days at 1 o'clock. Small winning days. And you weren't happy with the small winning day. So you went and kept pushing the button until you turned into a losing day. Is that phrased better? Does that make sense, everyone? I'm just giving you a lot of intelligent experience because it's something you got to watch out for, right? So the McDonald's days to me are the killer days. And I have found for myself, and I have found that for an awful lot of people, the formula at the end of the week turns out to be 1 or 2 nice winning days. Maybe 1 big winning day, 1 pretty nice winning day, 1 losing day, just kind of an average lost some money day, and 2 McDonald's days. And it's amazing how often that's the formula for me. Now, it's nice to have all winning days, but it's not reality. If you're, in order to make money, you have to trade. I don't want to say aggressively, but you have to get out there and trade. And when you do that, you take some setups that you're going to stop out on. It's about probabilities. You can't get everything right. It's impossible. Nobody gets everything right. You're not supposed to. You're supposed to make money. That's what you're supposed to do. So here is last week. And I just want to show you how this plays out and also just give you a sample for those of you who've never been in the room, what it's like. This is last week, and I have split it into 3 sections. So this is Monday, Tuesday. And this is what's posted there every week, and there's the trades. So Monday I did 3 trades, and you can see there's the entry and the stops and the target. These are always posted for the room when we're live, and everybody can participate in these if they want to. And then of course there's the profit that happens. And then also what's interesting here is, have you noticed? Well, I'll talk about that in a minute. But there's the capital that you would have needed to do the trade had you been trading a 4-to-1 account. And you can see there that that Monday was a decent winning day, 1.5 hours. Tuesday, a McDonald's day, lost a little bit. Let's go to Wednesday, Thursday. Wednesday, a McDonald's day, lost a little bit. Thursday, nice day, triple R day. Friday, a 4-hour day, right? Stocks, Lynn, yes. Day trading stocks. Day trading stocks, yeah, these are stocks. So adds up to a very nice week. And that's what I mean by the McDonald's thing. There's a couple days where, hey, didn't get in trouble, just kept things fine, didn't have it that day, didn't do it quite right, whatever it is. And, but that's the way it is. It's not like you're going to have every single day being a winner. And I don't know if you've noticed something, folks, but the amount of capital you need today, this last 6 weeks, it's nothing. Why is that the capital you need to day trade is almost zero? I mean, look at the amount of money required on some of these trades, $2,000, $3,000, $4,000. Why is that? It's just the math, but why is that? It's because things have become so volatile, right? Then instead of a $20 stock, instead of having like a 20-cent stop and going for a 40-cent target, right? The stop is now 60 cents, and you're going for $1.80 because the volatility is triple. But that means with a 60-cent stop, you need a third of the shares. That's all it means. It means that with less money, you're controlling you're controlling a stock that moves more, so you make the money with the wider stops. And it's not that they're wide proportionately, it's just they're wide in actual mathematical numbers. The stop to the target's the same ratio, it's just that the stop itself has become triple because of the volatility, which is kind of funny. Yeah, Gary, funny you asked that. You have to be honest, I think people should always track what they do all the time. I stopped doing that on a regular basis a while back, just because I didn't think it was worth my time. I think I'm going to start doing it again because I think if nothing else, it's a great educational thing. About a year ago, I did a presentation for you. It was about a year ago that it was called Statistical Trade Review. And I tracked my stuff for that month so I could do the review, and I didn't do it since. But yeah, I do tend to find certain days of the week are better or worse. It's interesting, they changed over time. I've always had Thursday as a good day. I've never liked Monday. Friday used to be bad and then actually went good a while back. But it's a good stat to track. And again, you don't want to overreact anytime you track a stat. You have to let enough, information pile up to make it a statistically valid concept. You don't track your trades for 2 weeks and then go, oh, Mondays are bad, I'm going to take off Monday from now on. I mean, obviously, you let it accumulate for a few months and you look back and you say, okay, you know what, I never make money on Monday. Why is that? What am I doing? Am I starting too early? What's going on? So I think the trade analysis is critical. It's something I've talked about in other lectures and stuff, but trade analysis is, I think, extremely important that you get to understand where your strengths and weaknesses are in trading from a statistical point of view. So I'm probably going to, matter of fact, I'll probably go back and start and do April and keep the logs that I always did just so I can review from you guys from time to time. All right. Those in general? You mean in general people on Tuesday? I don't know how you can say in general. That sounds weird to me because it depends how you trade. I mean, if you like being short and everybody's long on Tuesday, you wouldn't make money. I don't know. I don't know as a general rule. I can't imagine there is a general thing. I think that's like, to me, that wouldn't make sense, Ephraim, because of this. Because if there is some stat like that, it's like averaging a box of apples, a box of oranges, and a box of lemons. How do you average those three things? I don't think it makes sense. And the point is that you find out personally how you do. That's what you find out, is where your strengths or weaknesses are and that type of thing. So the summary, and again, just to put it in English for some of you, if you were risking $500 per trade and you took every trade that I did in the room, you make $12,000 for the month. $1,000, you'd make $24,000. If you took $100 risk, you would make a fifth of that, would it be $2,000? So, depending on where you are and what you want to do, a room like that can be a way for you to follow along, to get an understanding, make a little money while you learn. So it's an idea out there for those of you interested, but at the very least today, I wanted to give you just kind of a top-down run on day trading. Have I done that? Do you have any questions? This is meant to be just what it was. Let me know. Do you have any questions? Did I do a good job explaining to you everything about day trading from A to Z? If not, please let me know the questions. I told you that you can be able to day trade with less than 25,000 required if you open a prop account. These are some of the concepts about it, and if you email me, I will refer you to the place that does this. A couple of key things are there is no waiting, there is no test to take. You're just opening an account. Your money is kept FDIC insured in New York Bank, Chase Bank. So, and I've known this place for a long time. The guy, his name there is Richard. He's been on the phone with people for hours, whatever they need. So it's very great service. And again, though, it's for somebody who, if you need the capital. This is recorded and will be archived. They're typically on archive KM until the weekend. So, and if you subscribe on YouTube, you'll get notified when because I post it on YouTube. It gets posted on the site and YouTube at the same time. So if you see it on YouTube, you can come to the site. You can watch on YouTube, whatever you want. The site is nice, just that they're all built into the sites. You can just go from one to the next if you want to. If you like YouTube, being hopped around to different videos, then go to YouTube, whatever you like. Okay. Well, Lynn, that's kind of a good question. Do you choose the stocks we trade in terms of just what the room is? What I'm doing in the room is showing you what I do, Lynn. Okay, so you can follow me if you want, but yes, I'm absolutely showing you what I do. Lynn, we get together. I send people typically by email. I send them my watch list. Okay, everybody logs in at 8:30. At 9 o'clock, I get on the mic and I review the watch list, and I go through everything that I'd like that day, and we boil it down to maybe a couple handfuls of stocks. And then I'm on the mic and I'm saying, here's BAC. If it runs up to here, I'd like to short it. Here are the numbers. Boom. So I'm telling you what I'm doing. You can do whatever you want. You can just listen and have fun. You can do exactly what I do. You can say, Paul, that's the stupidest trade I ever saw. I'm going to do this. So I'm showing you what I do, but I don't make you trade something. I mean, you have to hit the button and do what you want to do. It's all up to you. You're responsible for what you do. Whether I have a good day, bad day, whatever it is, you're responsible for what you do. So I do show you what I'm doing, but you pick what you want to do. But it is, I think, more than any room on the planet, it's something you can follow if you want to. There's no license required, Gary, at this place for prop trading legally, because it's based in Europe. So it's Europe rules, and yet the money's kept in America. So it's kind of the best of both worlds. So you open in 24 hours, you're trading, 90% you keep, 10 to 1 leverage, blah, 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 blah. You are the best. Oh, thank you, Jackson. Thank you very much, Andres. Andres, if you know the exact amount you're willing to risk in there, why don't you trade them on? You can, you can, Andres, but then you have to wait for week, 2 weeks, or 10 days, or whatever time you took it out to be free of the money. So you absolutely can. That's you know selling. Well, I actually like selling spreads, option wise, and that's a great thing to do in the midterm account. It's not a day trading thing, Andres, but that's exactly what you do. Yeah, I think selling spreads is the thing to do. You make a little bit of money, but huge odds that you're going to make that money, right? You know your max loss. You just let it play out. Thanks, Myrnis. Efren, do we still need? No, no test on Efren. No series. Anything 57.7, nothing. Okay. How do you choose a stock? I go through Milan for my personal trading. I go through about 1,000 daily charts, about 300 hourly charts, and the entire gap list every morning, synthesize it down to the things I like based on the strategies that I do. And then it's based on the strategic concepts on the chart every day. There's things that just jump out at me as being unique and having the best odds, and those are the ones that I follow. OT for the commission schedule and any fees, if you wouldn't mind, just email me and then I will refer them to you and they will go over that with you. And I say that partly because it could vary if you have a track record or a big trader. Okay, so you can get the specifics from them if you don't mind. I trade the bias, Andres, every day. Now, I write about that every day, and I talk about, if you want to trade the market itself, here's what to look for. I use that very much. I typically rarely trade the market itself, Andres, but I use that exact concept of when to go long and short. So in other words, when the letter says, if you're trading the market, blah, 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 go long the QQQ on the 15-minute buy set above 203, whatever it is, right? Well, that's when I'll be looking to go long, but I, 90% of the time, almost all the time, will prefer to take a stock that has relative strength, a better setup, or whatever it is. So I use that timing, and then I buffer with the stock position that I think is a better setup. And as in the letter, I can't be that super specific, right? It's more general. Here's the support. If we fall, the buy setup in this area is where you want to be long. It's not like the trading room where it's exact, because I'm giving you concepts before the market opens, and naturally that's a little tough to do sometimes. What some people will do is you may have a bigger investment account with $100,000 in or something, and you don't have the free cash to take out 25,000. So maybe you take 5,000 out of that, and you can then day trade if you want. That's what some people do. Is that maybe they kind of have the money, but they don't have it available right now. So they want to day trade, so they go and take it out there. So that's another answer to it. You can combine that also with the seminar program. There's a little benefit you can talk to me about that. If you want to take the GTS seminar program and the prop program together, the prop account, get a prop account and the seminar program together, you can. There's a little bit of a benefit for you to do that. Talk to me about that if you want to do that. And any other questions, from anybody? So have a good holiday weekend, guys. I'll see you soon.